If you're looking for a way to add to your retirement income, you're going to want to watch this entire video because we're explaining how much an annuity can increase your income, which annuities offer the most income, and tips on how to pick the best annuity for your future. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing how to use annuities to jack up your retirement income.
Yeah, before we dive in, though, just a quick disclaimer. At Stop Being Sold, we don't promote specific annuities, nor are we paid by an annuity company to talk about any of this. We just want to provide you, the consumer, with the info you need to make better decisions for your finances and financial future.
There you go. That's our disclaimer. All right. Thank you, Brian, for that.
You're welcome.
All right. So let's get into it. Annuities can be used to increase retirement income by providing a guaranteed stream of payments in exchange for a lump sum payment or a series of payments. Now, there are several types of annuities. We've got immediate, fixed, MYGAs, variable, and indexed, with each having its own set of pros and cons. So, Brian, let's talk. Let me start with this big question. One I'm sure most people, the reason you're turning into this video, how much can someone actually increase their income in retirement with an annuity?
Great question. The amount that you can increase your retirement income by using annuities can vary depending on several different factors, Michelle. The type of annuity you choose, the size of your initial investment, and the current interest rate environment.
Okay.
Annuities can provide a steady stream of income, which can help supplement other sources of retirement income, such as your Social Security, pensions, or other investments. However, it's important to keep in mind that the amount of income that you can receive from annuity is limited by the amount of your initial investment and the rate of return that's offered by the annuity company. In addition, an annuity is not a guarantee of higher income, as the return on your investment would depend on different factors such as interest rates and market conditions, stuff like that.
Okay.
Therefore, it's difficult to estimate the exact increase in income you can expect from an annuity without considering your specific situation and the annuity options available to you at the time.
Okay, so let me rephrase it. Let me phrase it this way. Is there a type of annuity, or which type of annuity will produce the highest income?
Yeah, the type of income that the type of annuity that would give you the highest income depends on several factors, including your retirement goals, your risk tolerance, and overall financial situation. So we're going to take a look at each different type.
Okay.
Let's start with immediate income annuities. These are also known as single premium immediate annuities, SPIAs for short. They're designed to provide a steady stream of income payments starting as soon as you make your initial investment. This type of annuity can provide a higher level of income compared to other annuity options, as the payments are made right away and not deferred to a later date.
And once you sign that contract, you know exactly what those payments are going to be, and they do start immediately. And
you'll know before you sign the contract, because you'll see a summary of an estimate of what your payments will be based on the dollar amount of your initial investment.
Okay. All right. So let's talk fixed annuities next.
Okay. Now, these offer a guaranteed rate of return, which can provide a stable source of income in retirement. However, the income generated from a fixed annuity may be lower compared to other types of annuities, as the return rate is set and does not vary with changes in the market.
All right. So what about MYGAs?
Almost the same thing. Okay. MYGAs are a multi-year guaranteed annuity. It's a type of fixed annuity that provides a guaranteed rate of interest for a specific amount of time. Let's say it's typically range from 2 to 10 years. And they're designed to provide a stable, low-risk investment option for people who are looking to generate a steady stream of income in retirement.
Would you say that MYGAs are the least risky?
I really like MYGAs. Least amount of risk would be the SPIA.
The SPIA, right? The immediate income annuity.
Yeah.
Okay, got it.
And then you go into the fixed, and MYGAs are about the same. And then we go into the next chapter, which is variable annuities.
All right, let's talk about those.
Yeah. Now, these can provide a potential for higher income, as the return on the investment is tied to the performance of any underlying investment options. However, with higher potential returns, Michelle, comes higher risk.
Sure.
And the return on your investment can be affected by the current market conditions. So you got to be very careful on that one.
Okay, let's cover last one is indexed annuities.
Yeah, they offer a rate of return that's linked to a market index, so such as like you're going to track the S&P 500.
Sure.
Now, these provide a balance between stability and growth potential as they offer a guaranteed minimum return while also allowing for the potential of higher returns based on the performance of the index.
Okay, well, that's a lot. This was all right. So basically, in summary, what I've heard you say is it really boils down to first knowing your goals, your retirement goals, knowing how much you need or want, and then really being clear on your risk tolerance, and
Definitely.
then back into the type of annuity and find the one that meets those requirements.
Right. And at the same time, also one that meets your time frame for taking the income off of it from immediately, like tomorrow, you need it tomorrow, 3 years from now, 5 years from
Sure.
now, 10 years from now. We got to factor that in also your time frame.
All right, good point. All right, so what tips then do you have on selecting the right income annuity for retirement?
Yeah, there's several of them. Here's a few things that you can make sure that you pick the right annuity for yourself. Okay. The first thing, which was mentioned already, but we need to repeat this, is to determine your income needs.
Yeah.
That's probably the biggest thing right there, Michelle.
What do you need?
Yeah, how much will you need in retirement to cover your expenses first and foremost? This will help you determine the amount of money you need to invest into that annuity. So
Okay. All right. What else?
next, let's go to your risk tolerance. Again, we've talked about risk tolerance before, but different types of annuities come with different levels of risk. For example, if you're looking for a more conservative investment, you may consider a fixed annuity. If you're willing to take on a little more risk, you may consider a variable annuity.
Okay.
So, and here's another tip. You need to compare the annuity options. And like I said before, there's different types of annuities available. So it's important to compare the options and understand the terms and conditions of each one of them contracts because they are different. And you need to consider factors such as the length of the income guarantee, the
Hmm.
potential for higher returns, and here's a big one, any restrictions on withdrawals from that annuity.
Oh,
You
that's
got to know
huge.
that. So
Yeah. All right. So what about, I mean, in terms of just looking for the right annuity for you, your situation, how important is it to review the insurer's financial stability? I mean,
massive.
okay, I know that's important. Let me ask you this, but how, is it
Yeah.
like, should that be at the top of the?
Yeah, it should be. It should be because here's the scenario. It's important to choose an annuity from financially stable insurance companies. Okay, that
Right.
makes sense. And you can easily research the insurer's financial stability and track record before making that purchase. But think about this. Higher rates, higher potential rates and higher potential income, Michelle, usually has more risk involved with it because sometimes you go from an A plus annuity carrier to an
Right.
A minus or a
Right.
B double plus. And the lower you go on that scale of the ratings, Michelle, the potential higher return, but you also start taking on more risk with that also. Be
Okay.
careful.
All right. All right. What other tips do you have?
Um, and for those of you, and I know many of you on our channel watch us just because we're fun, number one,
So
but
fun. So
but
fun.
but I 25 years as a financial advisor. My suggestion is consult a financial advisor. Even if you don't want to, and you think, oh my gosh, you're going to charge me fees, whatever. Honestly, with everything we've already talked about today, understanding annuities, you need an advisor that can help you understand the different types of annuities and they can provide you valuable guidance and help you choose the one that
Sure.
fits your specific needs. And here's why they take into account your individual financial goals, risk tolerance, and overall financial situation, and they're going to provide personalized recommendations. But here's the key on this one. And this is very important when you're choosing a financial advisor, especially with all the diverse annuities that we just talked about here. You need one that is independent, one that doesn't work for just one insurance company. And because that way you got more choices and you can have a product that's more customized to your individual needs. So,
Absolutely. And the other thing too is if they start to sell you something, just say no and don't speak with them anymore. Find the right person.
right. Ask for a would they recommend a different annuity if they only recommend one from one specific company? No, you need a second opinion.
Absolutely. Well, it's this analogy. If you break your leg or you've got something seriously going on medically, normally you get a second opinion. This is your finances and your financial future. It doesn't hurt to get a
Right.
second opinion or a
You
third
broke your
one.
leg, you wouldn't go to a dentist.
No. I'm like, well, no, actually I wouldn't. I'm kidding. All right. So I'm just so we can move on. I think that really the big takeaway here too is you mentioned it a few times. The key is to know what you want, know what you need, and then really understand those contract terms before you purchase.
You're exactly right. Make sure the terms of that contract matches up with what your goals are. It's that simple.
Absolutely.
And that could include like the length of the income guarantee. If the annuity you're looking at has an income guarantee of 5 years, but you need 7 years of income or
Sure.
10 years of income, that's not the annuity for you. Look at the potential fees, any additional charges, and the key, again, the second time I mentioned this, make sure there's no restrictions on withdrawals from that annuity.
Absolutely. Yeah. The last thing you want to do is get locked into a contract, and there are penalties for
Right.
breaking these
And
things.
you need that income. So,
Yeah. And I think that's the one thing I've learned from you doing just these years worth of videos is read the contract always, whether it's for
definitely.
annuity or anything you're signing
Anything.
financially, all of it. And don't sign it unless you understand there's nothing wrong with asking a million questions,
Right.
you know? All right. So Brian, I want to shift gears here a little bit and ask you about income riders on annuities. They can provide an increased level of income in retirement, correct?
Yes, they can. And let me quickly define, and then I'll answer that
Okay.
question in further detail. And income riders are a type of add-on feature that can be added to an annuity contract. The purpose of an income rider is to provide an additional guaranteed income stream above and beyond the base annuity contract, as the income payments are based on the growth of the annuity's underlying investment.
Okay.
Here's the key though, you got important to keep in mind that the cost of an income rider can increase the overall expense of your annuity contract, and the amount of income you receive may be limited. So you got to read the fine print of that. The income payments generated by an income rider may be subject to changes in the market and can fluctuate over time. Make sure if you're choosing an income rider, you choose one that fits your needs. Most annuity income riders, Michelle, when you look at them inside the contract, it'll give you a breakdown of the next 10 years, for example,
Mm-hmm.
of what the payout is that year, each anniversary. And from there, pick and choose. Okay, you know what? That's the exact amount I need, but it's 5 years from now.
Sure.
Okay, that will meet my year income for 5 years from today for the rest of my life. Let's do that. So customize them to make it fit you.
Okay. All right. So what about using an annuity ladder to build lifetime income, using multiple annuity contracts?
That's a great question. I've used annuity ladders over my decades in the insurance business. And the idea behind an annuity ladder is to stagger the start dates of multiple annuities to create a steady stream of income payments over a longer period. Michelle,
Right.
I've had clients do the same thing with laddering CDs.
Sure. Yes. Yeah.
And so use that. If you've ever done that before, this is very similar, except for you're laddering your income payments. So let's take this for example. Let's say you had $300,000 to invest in annuities today. You
Mm-hmm.
might purchase 3 different annuities with start dates that they're spaced 5 years apart. This provides you with income payments starting in the first year and could continue for the next 20 to 30 years. Or if the annuity contracts are still in force for the long haul, it might be for lifetime income.
Okay. Quick question on you mentioned the benefits, but let's just like list out benefits of annuity laddering.
Okay. Flexible. Your
Okay.
flexibility. Okay. By purchasing multiple annuities with different start dates, you can have more control over the timing and the amount of your income payments.
And that's really the thing there, right? Is
That's
the
a big one.
control over the timing of it. And
Yeah. Compared that to an individual annuity with one income payment.
sure. Okay.
Well, guess what? You're stuck with that one. As soon as you turn it on, it's done for the rest of your life. It's going to continue.
Okay.
Here, at the end of the term, you might say, you know what? Cost of inflation's going up. What if I put step number 2 annuity, kick it in with 10% higher payments
Right. Okay.
starting 5 years from now. And then same thing with the next one. It gives you flexibility. So,
Okay. What else?
how about a guaranteed income? Annuity ladder provides a guaranteed stream of income payments that can also support your retirement expenses. Let's say your expenses increase in retirement. They're not supposed to, but just in case they do, this will help with that. And then lastly, probably diversification. You're spreading your investment across multiple annuity contracts, reduce your exposure to market risk, and help to ensure a more stable stream of income in your retirement years. So,
All right, great. So I have one final question before we wrap this up. This is actually a two-parter. I'd like to
okay.
go through the pros and the cons of annuities for income in retirement. And let's start with the pros or the advantages, right? So we already talked about a pro being guaranteed income and the potential for higher income. But what other advantages are there?
Let's start with death benefits.
Okay.
Some annuities come with a death benefit that can provide your beneficiaries with a lump sum payment or an income stream after you pass away.
Okay.
That's huge. Another one's tax deferred growth. With some annuities, your investments can grow tax deferred until you start taking income payments, and this can help to increase the overall growth of your investment.
Okay. And so is that are we good with the pros?
Yeah, because we've hit most of them
All right.
already.
So what are some negatives or cons of using annuities?
Number one, surrender
Specifically for
charges.
income and retirement, right?
Yeah, surrender charges.
Yeah.
Yeah, all annuities come with some type of surrender charge, but some come if you withdraw your money before the end of the contract, and this can limit your flexibility and reduce the amount of money you have available for other expenses. Just remember
Right.
that.
Okay.
Another con to annuities is they're complex products, and just by watching this video, you probably can tell, oh my gosh, now I see why they say stay away from these, because they are complex. Yes, they are complex, but done right,
Yeah.
they could really help build your retirement income for you and help you meet certain requirements that you need, like paying your expenses and providing that guaranteed income for the rest of your life. So,
Right. And I will just say something like this. They are complex, but that doesn't mean, like you said, you're watching this video. If you do the research and you really start to understand annuities, it's in the education as well.
it is. It's important to carefully review the terms and conditions of any annuity before making a purchase.
Or anything,
Anything,
right? But
anything.
especially an annuity.
Yeah, especially for today. So,
All right. What other disadvantages or
um,
cons are there?
how about potential for lower returns?
Okay.
Annuities are known for typically offering lower potential returns compared to other investments, such as the stock market. Some
Okay.
consumers take income from their stocks and dividends and stuff like that. So this is just another alternative, but with less risk than the stock market. So,
Okay.
and lastly, probably reduced control over investments. With an annuity, you generally have less control over your investments and the way your money is invested, because the insurance company is doing that for you. You bought it for that guaranteed income.
Okay, this has been really amazing. If you've made it this far into the video,
Thank
hit the
you,
like
number
button.
one.
Help us grow this channel. Let us know that you like the content we're producing. Don't forget to subscribe. And we are going to put a video in the pinned comment and also the description on how the Secure 2.0 Act is going to change. It's already doing it. It's changing your retirement planning, how you plan for retirement, I should say. And it can also change your retirement income. So go check out that video. It's on the Secure Act 2.0 and what you need to know and how it's changing retirement for the better, actually. A lot of good stuff in that. Make sure to go check that out. All right, Brian, before we wrap up, is there anything else that you want to add?
I just want to say, don't let the complexity of annuity scare you off, because in all honesty, think about this. If you have a pension today, your pension is designed as an annuity. It is an annuity. And they use insurance companies to pay out your pension for the rest of your life.
Mm-hmm.
Social Security is just like an annuity. Okay. That's paid out for lifetime income. You know what that amount's going to be. That's guaranteed. You bought that over your lifetime. So annuities do the same thing. If Social Security and your pensions can use annuities to give you a lifetime income of money coming in, paying your bills, whatever it may be in retirement, why can't you go and find one for yourself also that
Right.
can help supplement your retirement income and maybe give you that boost that you're actually needing? So,
Okay. Excellent point. Again, if you like this video, hit that like button. Don't forget to subscribe, and do go check out the video in the description and the pinned comment below on how the Secure Act 2.0 is changing the future of your retirement. All right, Brian, thanks so much for this. This was really in-depth and really good. And thanks to everyone who made it to the end. Have a
thanks,
good
everyone.
one.
Have a great day.